Yeah,
Oh, because of the live streaming. No, we're trying to be famous. Like, although, and then other things like, please everyone come closer. This feels like so far. Let's make it intimate, close, nice. On a general context, probably you guys also know like 500 is really active doing investment, bringing like international founders to accelerators. And the key markets for us, we do Latin America, Greater China, Pankaj is in India. We very soon should bring kind of Kylie in from Southeast Asia. We want to do more on Middle East too, and then probably more in Africa. So we start doing the beginning of the investments, doing like 1 or 2 deals, and then eventually we might have a partner locally. And the idea today, it's a pretty, like Ray and I discussed, we want to do more of a conversational thing about raising, because we know like last week you had a talk with Christine, and I think a lot of the foundation of like raising money is not that different. We're just talking more about like the differences here and a few tips that you can take from today. And then make it please as interactive as it can. You guys are here for 10 days, right? Okay, so what's one thing that people, no, normally it's Dave, keep on telling you, like if you start a presentation, you have to start with?
Traction.
Yes! Okay. You passed the test.
Can I get money?
That's it. That's a good way to start. Depends.
Yeah, that's a good way to get started. I have traction and I want money. Yeah.
But I think that's pretty serious. There are 2 things. One is the metrics that you want to kind of achieve on the fundraising on demo day. You have the forcing factor of demo day, putting a little bit more urgency on your fundraising. But there are different ways of looking at traction. So I'll build a quick case here. Let's say I know a few companies raise a little bit back home. Have any of you raised already something back home?
No.
How much, David? 50K. Okay. So I'll bring a case. And we can even do like 50K. But one of the companies actually in your batch raised 500K in their home with their kind of local angels. So there are 2 scenarios. So one scenario, oops, sorry. What looks better? I know you guys help me. He arrives here and said, well, I want to raise $1 million and I raise 50,000 with 500. Or I want to raise $1 million, but I raised 500,000 already. So even like when you think about how you frame that, it's on your, let's say you raise even if you raise 50,000, depends on how you frame a little bit of the following advisor round, right? So if you raise 50,000, but you want to raise another 200,000, already you move like 25% of your fundraising further. So what you want to do is to make sure like you can show, like find different ways to show a little bit more on the traction on your fundraising. Anything to comment on that? No. Okay. You can pull my microphone. Sorry. If you just grab the microphone because we're supposed to be a little bit on the microphone. So like, I think angel list is pretty important, and do spend time on that. And if you have questions, like approach the person who brought it in or any of the partner to go through your angel list profile. But even like how you frame that changes the traction of your fundraising, because you also have to build traction on your fundraising. And if you have some money at home, that's great. Find some notable investors, sometimes maybe within the sector you're in, that might be interested on your round, and then build that until you fill that to 100%. And ideally oversubscribe. That's even better. The second thing for you to think about other than traction, it's actually friction. Especially if you're international. Is everyone here incorporated in the US?
Yes.
Okay, so where are you incorporated? In India. So it doesn't mean like you have to be incorporated in the US, but I want you to think about in everything on the fundraising, you want to create as little friction as you can. It seems kind of obvious, but for instance, like a lot of companies structure in Brazil, and then they find a really great advisor that might put some money in, but it takes them at least 4 months to set up equivalent to their social security number, in Brazil, and then it takes a lot of time for them to wire. So they have to like really, really, really want to be in your round. And you want to be able, like, some people will really want to be in your round, but you want to be able to add early on, like with as little friction as you can. So think about your incorporation if you're international. And the other thing for you that you should be thinking about is, and that's more general for all the companies, it's like the more defined terms you have, the better it is. Like very often you don't know, like if you raise, let's say you raise at a different valuation at home. Let's say you raise 3 million at home and you think you should be raising at 5, but you're not sure where it is. But if you leave it very open-ended, when you start talking to investors, it's very hard for them to say, okay, why am I defining? It's very hard to bring like the first person in. So the more you know, like more or less, do your homework, you think like more or less you're within that range and it's a friendly round, start bringing in people who you really want. So think of both things, like build a track, try to frame it with a certain traction. Of course, you should not lie. If you don't have the money, you should not lie. But then also at the same time, think like what's the less friction to yes you can get your investor. So that means more traction, less friction equals action. That's the only thing I want you to remember towards the end. What is that?
More traction, less friction.
Yes. Okay. Now I'm done. I think this we'll have a lot more kind of interaction together on the landscape. It seems pretty obvious, but I want you to think about the investor landscape. For instance, most of the big funds in the US does not have a venture arm in Brazil. Most of them, and then you have to do your homework whether that happens to India, and then maybe that happens to China. So Ray can mention a little bit on China, and let's be more specific, for instance, in Brazil. So the landscape for Brazil is you have now one of the international fund, it's there. So Red Point, it's there, but Excel, Sequoia has one investor within the firm that invests from the main fund. So why does that matter? It means like if you're here in the US and that investor is interested in Brazil, it's in the US, then you want to take the advantage that you're here. And then because you have to compose your fundraising. If it's international, you have to compose your fundraising partially at home, partially here. So if you understand the landscape of where, like how the venture capital is or where the investors are, it becomes a lot easier for you to do. So maybe a little bit on China, how is that landscape?
Sure, yeah. So Bedy and I were talking about the differences between Brazil and China, and there are a lot. So in China, actually, all of the major funds, Sequoia, KP, which Excel has a JV with IDG, et cetera. All the big funds have an actual USD fund exclusively focused on Greater China. So it's not going to be very useful for you to come and talk to the GPs here. You can talk to them, but they're probably just going to punt you to the China team. So when you're here, and we can talk about a little bit later how to best use your time, you probably want to focus on the funds that don't have a presence in China, of which there actually aren't necessarily that many, at least of the big name ones. There are still a lot of funds that are interested, for example, in businesses that operate in China and don't have it on the ground on the ground team, but those are much fewer than I think Brazil and maybe India. I'm not totally sure about India, but definitely Brazil.
So this is data from AngelList. I think it's one point of reference. It doesn't mean like, okay, that's a valuation in your country. It doesn't mean like there's really 1,000 investor in Brazil. None of those are real, but it gives you a frame of reference. So I know Christine talks a lot about that. Like you all should, if you don't have that yet, but you all should have a spreadsheet with who you think your potential like pipeline of investors are. And then this is a great way to start. Like I think LinkedIn, add all of us on LinkedIn. AngelList is a good way. I went through the list. For me, it's pretty easy to like, on the ones I know by now, like most of the investors that are active in Brazil and within your sector, whether that might make sense or not. So find people like us that will fit well within your context to go through your hit list. But start looking at, for instance, like things that are interesting, right? Like a lot between all the venture partners, we discuss a lot whether in our geography the valuation is the same. So always filter what we tell you here. So very often we'll say, okay, before the demo day, you can raise an advisor round of 3 million cap, and then after demo day you can raise at a 5 mil cap. But very often that doesn't apply to your own kind of pool of investors. So make sure you find enough information about that and then prioritize your list.
Yeah.
So other thing, so when it's kind of looking at the landscape, map as much as you can. And the other thing that seems to be pretty obvious is you should try to build as much, build the bridges. So I'll give you a case. One of the company called Rota dos Concursos, it's a Brazilian company on education. And so when I say build the bridge, it's also how people understand the opportunity. So the last Tuesday when you all pitched about your company and Dave was spending a lot of time telling you guys, especially if you're in Arabic speaking market, Spanish speaking market, those are big markets that very often, if I'm a US investors, I just don't think about it. So help the other side understand your language. So this company called Rota dos Concursos, they are test prep for people who wants to go and work for the government. If you're in the US, that's okay, I don't care. But help investors understand that's in Brazil, that's the job everyone wants to take. There's a standardized test you take GMAT, so it's equivalent to GMAT, but it's better because you have a long tail because first your lifetime value is much bigger. You keep on taking the test until you reach the highest position, and then at the same time, people pay a lot of money for it. So when you tell an American that, okay, we're equivalent to a Kaplan and that, but our lifetime value is bigger, people pay a lot more money on that, then most investors understand. And another thing you can bridge on the conversation, for instance, one of the most active acquisition area in entire Brazil is in education. But most investors here don't know. But if you tell them it's big numbers, it's $10 billion, $50 billion, or whatever the addressable market you think it is, and you can target that will make them interested. Very often, I think, to be quite honest, is most of the investors, especially when you leave accelerator or during the accelerator, it's really local. So trying to think that you are building a company in India and then you'll find someone in the US interested in you, that's going to be very hard. But there's the more bridges you can build, the closer they'll feel the more compelling they'll be to join your round.
Yeah. So I think Bedy was right in emphasizing that when you do talk to an investor who's unfamiliar with your market, things you take for granted, you think they should know, they probably don't know. Even for China, there are a lot of I think Dave gave the example of during his or during one of the initial pitch sessions where we talked about, for example, a 400 million user platform that no one here has ever heard of, right? So that's very common. If you're coming from a foreign geography, don't assume that the largest, for example, if you're from Japan, don't assume people know who the largest telecom provider is. When you talk about your own education or your work background, quantify it. Say, I went to blah university. It is the top engineering program. Don't assume people know what you're talking about. When you say, I built a startup, this was my previous experience, quantify it and say, it was the fastest growing startup in this space. I got it to, this much revenue. I got the top tier investors in my home country to invest, et cetera, et cetera. If you throw out a lot of names that you think is are really relevant, for investors in the U.S. may not have any context, and they may actually just completely check out. So, like I said, make sure you provide a lot of context.
And then we'll go into a few cases, and then you guys can interrupt if you want to ask more about the cases. So the first case, it's called Conta Azul. That's a Brazilian company that does equivalent to Intuit here. So accounting mostly for small, medium business. So we were the first investor to come in. What they were doing, like in terms of fundraising, they actually raised a Series A, a really, really good Series A, just a few months after. The way they built that was they raised a small advisor round before the demo day with some investors in Brazil. So basically they leveraged 500 grand and then they went back to Brazil and said 500 actually believe in us because we're having actually a hard time. Like before that, we were talking about like a lot of people were talking about investing, but no one did. So we brought them to the accelerator. They went back home and then they said, okay, 500 put money in us. They did. It was a lot of changes for them. Like they changed the name, they changed the product, they changed their positioning. And then they raised a small round of about 350,000 so that they can move to the next level to do their Series A. And then when they were raising the Series A, the way they did it was they found someone within the advisor round who could potentially be interested in the Series A. So that was the way they bridged it. When they were finalizing, then they came back to the US and say, you know what? The guys in Brazil who understand the Brazilian market are betting on us, you should also come in. So they closed the full round, like on the Series A eventually with both kind of us and then back into Brazil and then back to US, in a really good round. And then now most of the investors in the market said, actually, they all want to put in the next round. So now they have to build the momentum for first find the right metric, like achieve the right, milestones. And then probably in next year, they will be raising the next round. If you guys have questions specifically, and then maybe we'll like switch on cases.
Yeah. And yeah, when you say you raise like money, for example, from well-known investors in your country, like I was saying earlier, make sure you explain what they're well known for. Like this investor who invested in, whatever, 3 publicly traded companies or 3 companies that eventually went IPO has now decided to invest in me. Or this investor who is ranked, on the top 10 VC list in my geography decided to invest in me, right? Don't just throw out a name and expect people to know what you're talking about.
One thing that helps a lot on the thinking on like when you're here fundraising, it's not always easy, but very often like some of the mentors get excited within your specific sector. So last batch we have a company called Couponomia, which is doing kind of coupons equivalent. And then one of the mentor was very early at coupon.com, and then they just found like a really good match there. So they could find a good advisor like on their mentor node to bring this advisor in. So very often, even if if they're not interested in your geography, but sometimes if they get really interested in your area, start bringing them in, then when they go back home, it's a lot, you can tell them, we came to 500, people got super excited, and one of our advisors actually built something equivalent super big in the US. And then when you go back, then you start building that, the beginning we're talking about the traction of the fundraising itself. You want to tell a case in China?
Of a company raising money in the U.S.
Or both? Like, how do they manage? What was the process? How do they manage that?
Yeah. So, oh wait, there's a question.
Oh yeah.
Yeah.
About the terms, I divide. I want to. So for Series A, like for Azul, so they raise the money from Brazil first. So, do they send it to there and then come back to the U.S. and use that term, or do they send it to the U.S. and then come back, go to Brazil to raise on that term?
Okay. So the question, I'm just going to reply. Ask the question again. So the question whether on the Series A, it was Brazil who set up the terms, was leading the term, or the U.S. investor was leading the term. Most of the time would be your local investor, especially if you're targeting the Brazilian market, right? Very often it's your local investor that will set the terms because, and then it's very specific for Brazil. There are a lot of, there's maybe like a lot, let's quantify that. Maybe like at least 5 to 10, I would say 5 to 10 investors in the US who would do Series A, who is interested in potentially participating. But then they feel like they don't know the market that well. So they are afraid to be leading. They'd rather say, there's someone else doing, we'll follow. So it depends a little bit on the maturity on like the other side. In Brazil, most of the investors haven't done their commitment to have a full team there, or so they're more like on the following mode. But a lot of the investors will follow. So in the case for Conta Azul, the terms were set in Brazil, and then they came here.
And the company is set up in US.
That company, so very specifically for Brazil, they, because of the whole kind of structure set up between both countries, very often companies set up in a Cayman, BV Island, and then a shell company in the US, and then operation in Brazil. So most of the companies who raise Series A, not all of them, but most of them raise in this crazy structure. So you have to understand really well, like when we're talking about friction, you have to really understand what's the context for most of your potential investors come in, and then what type of legal docs they're used to. Oh, David.
Yeah, because we're having a very similar problem, the legal structure. So do we register a US entity, a Mauritius entity, become the holding company? So we are still looking around the best structure people will make us to create it, not just for US investors, but for European investors and African investors also. We are still going back and forth on the best structure.
Okay.
So from this experience, what would be your best advice?
Consult a lawyer. What's the best advice for a best structure? Consult a lawyer. I would put you in touch with few people who I know I think like every country it's completely different. So I know what's the optimal structure, for instance, for Argentina, and I know what's for Brazil. And what are some of the options and the cost to it? Because sometimes it's like, okay, the optimal structure might be, I'm guessing here, you're in Mauritius, and then anyone can come into Mauritius, and then you have this kind of shell in the US, and then back, I'm guessing that might be good. But then it might cost you $30,000. And at the beginning, if you're raising just like 150,000, 300,000, I don't know, like, the cost will be super high. So it's also, there's a part of it is taking the best decision for long term. The other part of it is like what's possible to do today. So finding that balance. But talk to like at least 2-3 lawyers, and for most most countries, they're experts within that. And then ultimately you take the decision.
Yeah, I don't know how it is for your country, but in China, for example, it's industry specific as well as currency specific. So depending on which industry you're in, which currency you're able to accept really determines what kind of structure you're going to have. Once again, there's legal costs and time associated with it. If you, so you should consult a lawyer.
Just for the
Yeah. So you should consult a lawyer from the beginning and know at least like the basics of why you chose a certain structure. What are the things that will prevent you from doing? And also I would say the timeline. The timeline is very important to investors. Like be very, like you want to be able to tell them up front, like, hey, you know, this thing is going to take me 6 months, 8 months, maybe 12 months, you know, the structure for me to complete. But I need your money now or whatever. But if you tell them that, up front, it's much better than when you're signing, you're like, hey, by the way, you're going to have to put money into this entity. The entity, I'm promising you, it's being structured right now and it won't exist until 12 months later. That's just doesn't start you off on a good note.
More easy just to open
So the question is regarding to friction, wouldn't it so much easier to open in the US? So few things you have to take into consideration. And for instance, first is whether the people who you're raising money. So there are a few things. One is first, do you have revenue in the US or not? So you can just say, okay, it doesn't matter. I'm gonna go and then in a day I'm gonna open incorporate here. But let's say you do not have revenue in the US. The moment you exit, you have to pay capital gain in the US because you are a US company. And you have to pay income, also capital gain in Brazil. But there's no treaty between Brazil and US. So you're gonna get tax plus tax. So when you're raising, you're super happy that the money came in. But when you're exiting, you're like,
they care about the revenues, and what's the real amount that they're going to be interested to hear? So basically, is it going to be a percentage, or is it going to be like $1,000 monthly recurring revenue, or we're selling like physical stuff? So what's the real numbers or the real attraction for those people?
Okay. Or revenues for investors?
Yeah.
Okay.
Depends.
Yeah, I would say that's so dependent upon your product and services. Yeah, obviously.
I mean,
Uh-huh.
so basically there is the early stage. So we're all in the early stage, right? So we didn't really went to the enterprise companies yet. So we're still in the early stage. So investors who consider to invest in early stage or angel investors, what's the revenues, the right revenues for them to be interested to put money in this? Or it's not the revenue by itself, it's something that's related to the idea or to the team or to the whole workflow of your product or startup. So is it gonna be more of revenue perspective or from the whole aspects of your startup?
Maybe if I can add to that, is the revenue is the most thing that investors will look at, or maybe, for example, the number of users, maybe the retention, maybe is how revenue is important at this stage we are in.
Okay. I think I'm going to be really general. I think it's like the more like traction you have depends on the investors. It's just like, unfortunately, there's nothing like when you were at school. Like if you pass, like in Brazil, it's 0 to 10. If you pass 5, then we'll give you money. So unfortunately, there is no pattern for that. I think bringing from an international perspective, I think I see, and then very often like frame that within the Latin America investors. The Latin American investors are more like leaning towards companies that have revenue than don't. I think if you can prove like some companies just like to have like certain amount of traction to that, and then because there might come in a strategic investor later on that will plug in the whole distribution plus the revenue side right away. So it's not, it really depends on your company and the type of investors you're doing. So the answer is I don't know. But one thing that you guys should stress out is on your metrics review. Like you have all, like I said on those, I said at least on 70% of the metrics review with Parker was there, Matthew, and the mentors. When you're thinking about your metrics, like your top 3 metrics, those are normally the things you should be tracking by demo day. So by demo, it doesn't mean it's for your business. So I would just stress on that constantly. Like, what's the goal on those metrics and what does it mean? And then talk to people who are in similar area who had raised, and then you start doing your own comparison.
Yeah, I guess for your question, I was a little bit confused because that seemed like a very general investment question. If you want to take it from your international company, specifically addressing like an international market and talking to, for example, a US-based investor who may not know your international market and which metrics you want to focus on, then once again, it's about giving context, right? It's to say, hey, I have this many, for example, downloads in this category, and I am this much higher than the next player, which places me in the top 5. Giving people context, because you have to assume that, especially when you have a product that does not address the U.S. market, the investors here are not going to understand the magnitude of what you're talking about, how important those stats are. I don't think that there is only one stat they're looking for, especially if it's like a market that they are just interested in and not totally familiar with. If it's a market they're totally familiar with, you better make sure that the metrics you're giving you are like top 3 in the market. So.
Just to give you an example, right before the talk, Ray told me, oh, this company only made $1 million. I'm not impressed. And I said, which company made $1 million? I'm totally impressed. And we work for the same firm.
Yeah, different regions, different. Yeah, even though it was kind of the same product.
We were just talking about that. So,
but I didn't know you were not impressed. but
I would be, but if you all have a revenue of 1 million, I think you can scale that. I'll be happy with it.
$1 million, right?
$1 million.
currency, not like
Or pounds if you want.
Yeah. That's better. Right?
Just quickly on another case, and then we can kind of leave it open. Do you want to tell a case in China? Instead, I'll go to another in Brazil.
okay, sure. I mean, okay, so I think actually most of the companies that 500 has invested in, with the exception of two that I can think of, if they were China-based, they were actually addressing a global market, and their rounds were actually dictated by U.S. investors. So they raised money from U.S. investors. There are two examples I can think of where they were China-based. We were one of the few foreign investors, and the rounds were dictated by local investors. I would say the strategy really depends on what your team makeup is. So if you are, for example, in China, there's a lot of expats who are, foreign born and foreign educated, but just happen to have moved to China to address the large market over there. If that is your background, most likely you're going to find a lot of synergies, a lot more common conversation topics with other expat investors. And there are a lot of expat investors who live in the Chinese market, but, have a foreign background. So, we definitely have had success with companies raising from those types of investors. Just to give you an example, a Batch 5 company, I won't name them, even though they might be obvious to people who followed our batch, raised about a quarter of their round from China-based foreign investors. So, meaning China-based investors with foreign citizenship. And then they raised like another almost 25% from rest of the world investors. So it really just depends on how you market your product and the vision for your product, even though their product right now really only addresses, for example, China and US. But they were actually able to get investors from everywhere in the world, right? So almost half of their round was just from outside of US. We also have another portfolio company that where half the team was located, or it was from the U.S., half the team it was from China. Their main development is China, and they were able to raise some money from China. Actually, the amount really wasn't very big, but it was a very name brand and relevant investor, and they just were able to get the most mileage out of that name, because you don't have to disclose, right, like how much this person gave you. But if this person is very well known in the industry, especially if they could be a potential exit for you down the road, you want to market the hell out of that, right? So I think that helped them when they were raising money from the U.S. I think most of the round came from the U.S., but if you have a few kind of strategically placed local investors from your country of origin, as long as you place them in the proper context, right, you really have to market your investors as well. It can really help you.
It is important for U.S. investors to have local investors with you as well.
Sorry?
If you are an international company raising money from the U.S., do the U.S. investor, for example, take a look that you have a local investor with you from your own country?
Yeah.
Is it important for him, or it doesn't really matter?
I would think it's very important, because you want someone on the ground, like local money in.
Why it's important for him?
Well, because if no one in your home market wants to invest in you, what does that say about you?
Can I qualify that?
Yeah.
I think it only matters if you're doing something local.
Yeah.
Not if you're addressing the American market or the global market. For example, Winpress is basically geared toward international, but more US and EU based. And we're based in Israel, but Iran is here for a year and a half. I'm just moving here, so it makes sense to take money from US investors and not from Israeli investor. We want the US investor to lead the the terms and not the Israeli. But it doesn't make sense because those Israeli investors don't really understand the market we're pursuing. The U.S. investors are more so in that certain position. I don't think Israeli money will matter. That.
Well, I guess the difference is you had offers from Israeli money and you declined them, or you just didn't even bother.
Yeah.
You just didn't even bother.
We could now follow up with some of them and say, hey, we're in the U.S. and we got money from private startup. I'm sure some of them. I even remember one conversation of an investor saying, hey, if Dave McClure put money in your startup, it was a year and a half ago, because we were talking about the fact that he was just going after trends and say, hey, I'm seeing where Dave McClure put his money and I'm putting my money after him.
Okay.
So I'm sure if I call him today and say, hey, remember the 30K or the 50K you said you put in Winpress, and if Dave McClure would invest, and guess what? That just happened 10 days ago. So I'm sure it would put money, but we're not really pursuing, and we're here. It's really hard to close, those things when you're over here and you want to talk to the Israeli.
Right. Well, can I just ask, so you basically started the company here?
Yeah.
Okay. So I would say that's very different, because I think in my mind, when I talk about like international companies to invest here, it's not like just your citizenship or whatever. It's more like you're an international based company. The bulk of your team is based outside of the US and you want to raise money here. And I would say, unless the bulk of your team is just like all customer service or outsourced, like if you have core staff members in a certain geography, you have co-founders from certain geography who remain in that geography, and that geography, in the case of China, for example, is a big market. At least me personally, and I think most of the other investors would think very similarly, we would want to see like a local investor put in money, someone who's involved in the local ecosystem, preferably in that specific vertical. That's like the best, basically, stamp of approval, right? Someone who's kind of done what, worked out what you guys are trying to do in that vertical, maybe different product, but, succeeded and is willing to be like, okay, I'm willing to put money in these new guys in my same sector.
Just to is exactly what Ray said. I think one thing that is important for you to think about, like we're talking a lot about geography, and it's more because let's think like if you're addressing a Brazilian market, who better than another Brazilian investor who will understand your market? So when you're trying to build the momentum is, if you're in the U.S., the best people to reach out to maybe not be the same nationality, but within the sector who's an expert within that. Then if they participate, they would say, oh, I think you're doing something right because I'm already an expert in the sector, or this investor, this person knows what they're supposed to do what they're doing, so we'll just follow. So that's the general framework to think about that. What we're trying to do is to think, because very often, but people will not say, I'm not investing in you. Most people won't say, I won't invest in you because you are from this country. You just happen to be a foreign founder, which is about 50% of the companies here in the U.S. So you're just one more case. Like we will not make a big case for you for being foreigner. Yeah, I think I'll go really quickly on like a second case. I don't think we'll add a lot of depth to it, but I think it's interesting to look how they did it. It's Complica. It's another education company. They do video test prep for if you want to go to the university. So standardized tests for university. The way they raised it wasn't on the accelerator, but what I wanted to build here, because the first case when we're talking about was someone who got the first check with us, went back home, raised some money, and then raised the remaining here. The second case, they had a very small group of angels there, but didn't have like enough traction for a Series A. So they came to me and say, would like to have some US investors kind of in. So that's often for companies that will not have access at all to the US. What we did is we did a small round. At that time, they gave us a favorable term. And then together I brought in like some other good investors that were angels. So very often, especially when you're raising the next round, very unlikely it might happen, but very unlikely it will be a large VC. Most probable is going to be a good group of angels that will be participating in your next round. So what we did was they were able to raise a little bit of money, just a little bit in Brazil, but the remaining of the capital of their Series A was raised here in the US. So they raised with a really nice kind of cap table. So they raised with Valar, which is Peter Thiel's international fund. So if you're targeting international market, there's a fund called Valar, which only invests mostly international startups. So Valar put money in VALAR.
What's about it?
Peter Thiel put a fund just to do international deals. So Valar put money in, Social Capital put money in, Shamat put money into that too. Another fund called Valor. Valor is a US fund that only invests, I know, it's Valor, Valar, and all of the variation of that. It's a $30 million fund that only invests in Brazil. And then they were able to, like, as they were closing, then they closed with a lot of, like, good angels towards that. So instead of finding, like, a really good lead, they were just breaking it up and, like, a lot of people putting, like, $250K, and then they closed their Series A. So that's another case. It was a good strategy. It was a good...
Become a problem when you have, like, 10 people each putting 100K or even more.
Yeah. So... depends on how you deal with that. I think there are two things. One is how many board seats are you giving? So they gave one board seat, which is to Valar, which was the only one who asked for the board seat. Because we all trust Valar, we say, okay, so Valar will be sitting on the board, 500 normally the follow on. So for the entrepreneur, basically he's getting capital and resource from us, from Valar itself, from Peter Thiel's kind of portfolio, and then he has one person who's going to sit with him like once every month to deal with that. And for the closing, it didn't make that much difference.
Yeah, but for follow-up rounds, you don't have a lead investor from the seed round. It could create problems.
You can also create a problem if you have an investor who probably will lead your next round and they don't lead your next round. That's even worse. So everything comes with a price. But it's both.
You still recommend that route to go to like 10, 15 angels and close around with only angel investors?
Talk to the entrepreneur. I think it doesn't matter what you choose. There's gonna be things you have to make up with, and then you have to, like, I follow really closely his closing. And it was tough managing a lot of people on the closing. I'm like, and then the lead that is not that big might change the term, and then how do you do that? But they're not that big. So I think the best thing is like thinking of you have to, ideally you'll have kind of a general strategy of like, okay, what are the chunks of your fundraising? And talk to a few people who has done that and like how they reach that momentum and what are some of the challenges. So I'll be more than happy if you want to talk to the entrepreneur. I'm more than happy to put you in touch with. Really quickly, on the third case, it's a Colingo. Colingo, it's a US company. And they said we're doing English teaching and our first market is Brazil. They raised, I think the open number now, I just checked on Angel, is like they raised 1.7 with like, when you go to the list, it's probably a list of investors that almost anyone would want to, and they only raise in the US. So they convince all the Americans that the Brazilian market is great. So that's a third round you can think of. And then I think the fourth is like, if you're an international founder, welcome to like most of the founders here in the Bay Area. And then you're just one American founder, like quote.
Yeah.
Oh. I know. All right. So that's it. I don't know if you guys have an additional question, feedback. If you learned from the beginning, David, what was it? Let's go through the...
So that is more traction minus less precious course of action.
Okay. Mission accomplished.
How can we contact all those Brazilian companies?
So what do you need? The question is, how do I contact all the Brazilian companies? There's so many of them. Sorry, what here?
Yeah, those
Okay.
you're talking about, Colingo and Collabs, something like that.
Okay, so here AngelList, there are how many companies? Do you wanna access 492 companies on only on AngelList? Come talk to me. We'll do a session together. We'll do office hour together. Yeah. And then ping your fellow Brazilians. They'll help you out too. No, actually, like most of your other founders, because you're also tied together, you notice like most people will be willing to chat, or they went through that just recently. Actually, you guys are a lot better in fundraising than we are. I'm sure about that. All right, back to work.
All right, thank you. Thank you.